Bitcoin breaks 100,000 as Coinbase makes a $2.9 billion power play, while Ethereum and altcoins surge. Fed holds rates steady, but warns of tariff-driven inflation risks, sending markets into a cautious dance. All this and more on today's After Hours. Here we are. You're tuned into office hours. Nope, we're after hours today, Peter. We're after hours.
You're busy. You got a busy day today. You got a lot on your mind.
It's more that my new glasses, I forgot. I had an appointment with the optometrist in order to change it, and I don't have my right prescription, so I can't actually see across the room.
I see.
You're tuned into After Hours for May 9th, 2025, where headlines meet price action and every story has a ticker. I'm one of your hosts, Tom Hartman, alongside Peter Bad Guru Hartman, to extract the signal from the noise. After Hours is brought to you by Traders Post, the greatest automated trading platform known to man.
But that's echo, that's not reverb.
But more on that later. That's supposed to be reverb.
Yeah, I know.
That's supposed to be delay. For now, before we turn our sights to all things markets, Peter, how has your week been going? There, I said it.
What did you though?
Yeah, I got it out.
Yeah, and by the way, you said optometrist, which I don't think is a word.
Optometrist.
Yeah, no, you don't have to prove that you can say
Ophthalmologist.
Ophthalmologist.
Entomologist.
Gynecologist.
There you go.
That's a guy who's a ecologist. I don't know. My week has been good, preparing for Consensus 2025. Lots going on, so a lot on my mind with that.
It never really clicked that we're going next Tuesday.
I know.
It's like, oh, there's a lot of things we need to do. I got to record next week's blueprint. We got to prepare for live streaming out in the field. There's it's all kinds of things to do. It's pretty interesting.
But I really loved the interview editing the interview that Mike did with Rebecca Trades on the Trading Bot Sessions. A really cool interview he did. I mean, I guess you guys talk about and you guys show like professionals and you guys are professionals, but to see a stay-at-home mother trading, successfully, really makes you think. It made me realize like a lot more people are going to have to start trading, especially when they lose their job to AI.
All right, so I've actually been saying this for some, I guess, a year now. That and this is something I've been saying for Traders Post. It's there. If you're not exposed to markets, you're gonna go downhill. It's just one of those things. Like, it's not just every market matters. That through all of time, people always have to be exposed to markets to make money. No, it's not that. It's because of the financialization of our system. Because of the Triffin's dilemma and the way that the Eurodollar system works with dollars, more and more of systems are financialized, meaning that the assets go up, the tangible and intangible assets go up in value as the currency gets debased, and just the economy suffers. Both the exporters have to suffer, and the economy of the country that has the world reserve currency. And so inevitably you get to this point where if you want to stay ahead, I mean, you got to be exposed to markets. Before it was like you were exposed to markets in order to make some extra cash. Then you were exposed to markets in order to do your retirement, right? And all these 401ks, and okay, you retire, then you start collecting dividends or selling off your stock. Then the dividends started disappearing. Then it's more about stock buybacks, and so the prices of the stock market go up. And then you had to be exposed to the stock market in order to avoid inflation. And now you have to be exposed to the stock market to make you have to like supplement your income that way. Right. Like that's what it seems like, and more and more, because the opportunities for that in the regular space is so few. So yeah, I believe it's one of those things where the knowledge of how financial markets work is like crucial in everyday life in order to make decisions. I think it should be like taught in school. Like you need to know how to do that. And then the second is that just like someone might be an Uber driver, and someone else might do Fiverr gigs. Some other people will have a propensity for trading, and that's what they'll find their way to do. There's all kinds of ways of expressing that. On top of that, I think automated trading will be the thing that everyone has to do eventually, because you'll need a system that's doing it on your own while you're doing your other job or two
Absolutely.
jobs.
Tom, okay. So I hear what you're saying, and I completely agree. But I think it goes even beyond that. Like the like let's say we live in a world, and this is plausible, where the Uber jobs are gone, where the Fiverr gigs are gone because it's mostly AI. Well, in that world, you're going to have AI companies, a lot more AI companies. Well, that's more trading that can happen, right?
Right.
And there's just going to be fewer jobs. Okay, there's going to be fewer jobs, especially jobs that people don't want to do. People still want to earn money. There's only going to be so many masseuses and dancer and violinists, but there's still going to be money circulating around.
That's right.
So you're going to need the people. Like what the market is are human beings deciding where value should go. Well, that's a valuable thing. That and so then you have now where I wanted to add to what you were saying and just modify it a bit is that yeah, there are people who have a propensity to be able to be traders.
Right.
That's the world we live in now. But we're going to be moving to a world where that barrier to being a trader, you won't need a propensity because of copy trading and automated trading, right? I think you're going to have groups of people who are just following along with someone like you or Mike or whatever other people who are trading, and they're not spending time learning the markets and deep dive and understanding this and looking at graphs. They're copying the trades of other people and benefiting from that.
Yeah, in the
It's
same way
it's
as you
kind of
had money managers or
Mhm.
investment advisors, you could have people, but they're not trying to 10x your money,
Right.
right? They're trying to keep your money and have generate some sort of like fixed income or different cash flow. Um, but yeah, you could have those people who are actually have an aptitude for really generating high level profits in the crypto space, in the equity space, or whatever it is, and it'll be a whole new college industry. Who knows what that'll look like?
And I think it'll be kind of like so in the past you had earls and lords and the leaders of your rabble, and what they provided was, look, these people here, I'm going to make sure that they're okay. That's my
Right.
job, to make sure that these people are okay. In this context is I'm going to make sure that these people have some type of income coming in, right? That my population. And you're going to have a bunch of these people are going to be finding leaders to follow that match whatever they want, and that they're going to be getting some measure of income from the copy trading of this lord, this earl, this king, this leader. That's kind of how I see it.
Well, I would say yes and no. So it's sort of like how there was a time, I know it's a head scratcher, where the stock market was the newfangled thing. It
Right.
was the new crypto on the block, right? Where people were able to buy into it. So the Roaring Twenties is like the story's famous for that, where people would be in nightclubs and there'd be a ticker tape in the corner with the stocks, the stock numbers coming out or out for the day, and people would drink and see how much money they made and the whole thing. In the same way, people check their crypto wallets to see if they're making money off of Pepe coin. Then that becomes, the volatility goes down, the rules become normal, it stays there long enough that it becomes more of a staple. And then you have other things that that then get traded. And then we had the options market, futures market. We had all kinds of different derivative swaps, all these different things. Now we're inside of the crypto market. So now with the crypto sphere, the stock market is going the way of like the bond market. It's like people don't even think about the stock. Like, okay, the stock market goes up 15% per
Right.
year, 20% per year. It's sort of like getting your bond coupon. And then the crypto market is where you can get outsized plays. But then there's other markets that are also starting to be created. And the thing that I'm actually very excited by, and that might be more appealing for the everyday person, I wasn't actually able to touch on the story today, but I think maybe we should, which is the Polymarket, the betting market. Kalshi, Polymarket, and I believe Interactive Broker has events and stuff like that. And what was fascinating was that we had recently, for example,
I
let me
can't
just pull
show
up
your
something here.
screen. You'll have to show your screen if you want.
Yeah, just gonna pull this up. So there was a bet for the Pope, right? So who was going to be new Pope? By the way, a new Pope this week. And I thought it was fun. I even tweeted out here. Where was it? Pope Polymarket. I was tweeting out, hey, by the way, don't forget you can make 3 to 10x your money betting on the popes. And here it was. So I just tweeted out. I took a bunch of bets on a bunch of them. What was fun for me was that I just took a picture of all the top 5 or 6 Pope standings, and then I said to GPT, hey, I have this amount of money I want to allocate. Allocate the amount of money for across all these different Popes that gives me the best chances of making some money at the end. And it had a whole span. Okay, this is optimized. You want to put this much on this person, 10% over here, 7% over there, 20% over there, and you want to hedge. It had me hedge with Parolini, the top guy, so that if I were to lose, I just was wrong, and Parolini was the one who won. I'd lose money, but not as much money as I had bet overall. Now, I hadn't even thought about that. I didn't even thought about how would I go about doing that. I was just interested in making a bet on the Pope stuff, and AI was able to generate how that bet could be made. I lost because some dark horse guy that no one even knew about, whose odds were less than 1%, I think it was 0.03%, he won. And if you take a look here on Polymarket, that guy won. A guy there on Just Punch won $64,000 off the bet.
Someone
$1,000 bet. He bet $1,000 and he made $64,000.
Wow.
Yeah. And a bunch of other people made money too. I think the market was like a $1.4 million market or something like that.
That's crazy.
Yeah. So the opportunities to actually bet, like to use your knowledge and use your interest in order to actually make money, is increasing. So on Polymarket, there's all kinds of different markets here that you can actually bet on. And some people, I mean, I didn't know that people were making like a living betting on these markets, right? Some people, that's their job. They go and they research, they understand how the spreads are done. If some people care about the elections for governor or state elections or municipal or anything like mayor, and other people care about sports and or geopolitics or whatever it is. So instead of just sitting around listening about what Trump is doing, you could bet for or against what Trump is doing and make money that way. And more, this is becoming more and more prevalent, more popular. And so these sorts of things where people are going to need to find a way to monetize their understanding, monetize their knowledge in these markets increases. And here you're not going to get necessarily the leader, like you're saying, where you're copy trading. It might be that just like you're putting on the nightly news, or people used to put on the nightly news at 6 o'clock, you put on the news for your favorite thing that's giving you an idea. Okay, this is how I should bet on here. You put a couple $100, and then you're expected to make, on average,
all right, look,
3 times your money.
I hear you. Just real quick, Tom, if you could just move over to your right to center yourself on screen. Just my OCD. I hear what you're saying. Okay, I do get what you're saying. Problem is, and you've probably noticed this, that the world is filled with way more people who need the least amount of thought in it. Like, why are people going to these widget jobs? It's because they don't have to think about it. If I have to think about where to place my bet, that's already too much excitement for what I'm looking for.
You think so?
Yeah.
For most people?
For the vast majority of people to be paying attention to the news to figure out what they're going to place their bet on so they can make a living,
right?
It's not going to happen. It has to be more automatic. Look, there's going to be some type of sovereign wealth dividend or whatever, UBI, whatever the people are calling it. There's going to be something like that.
Okay, so I don't think so. And just to finish up this topic over here, I did send you this this link to one of the groups I'm hoping to interview at Consensus 2025, which is about monetizing your IP.
All right.
So I've been waiting for this type of thing for a long time now, where the idea is that you're creating video content, text, images, music, whatever, and you are providing it to a blockchain in such a way that when and this is what, from what I understand what this project is, don't quote me if that's not exactly what it is, but it seems like it, where when AIs are then using it, you're getting some sort of revenue through the usage of your data. And systems like this will have you, I'd imagine, eventually have you, it'll just be automatic. It'll be like within your Scrivener software, within your music software, or whatever that you're doing, that automatically press this button and you're going to make revenue on it.
So I've heard you say this, but so much of creation is recreation of what already exists. So how do you attribute something 20 layers deep?
That's where AI agents, these are some of the questions I want to ask them, but this is where AI agents can actually put a number on these sort of things, because it's measuring tokens, right? It's measuring those lengths. So if I were to tell AI to generate an essay for me and say make it 10% more Alan Watts and 30% more Seth Godin, it can do that.
Yeah, but that is simpler than. Okay, so I created an app this a couple of days ago. What I did was there was a command line app that scanned through a video and selected frames for a video, that frames that weren't blurry, that were in focus, that had action going on, yada yada yada. I wanted something like this for thumbnails for Traders Post, right? Because I have to scan through the video, I have to find people's faces and pull them out. I wanted to simplify that process. This command line tool, I'm not a command line guy. All right, that's not for me. So I use Cursor to create a interface for that, a web interface for it. So then I could just drag in my videos. It does it. It creates the folder on my computer and it outputs the 10 pictures per video in there. Perfect. I didn't create that GitHub repository. And then all the bits that come on after it, they're all like it's ShadCN. It like, at what point can you say this one was mine or this one is this person and fraction of a fraction of a fraction? It becomes so convoluted.
Well, fine. Maybe your thing, when you use the GitHub repo, you didn't get paid for. You can attribute it to that, but maybe GitHub will be able to pay that user for hosting it on GitHub and adding that to the Copilot AI. So maybe not every AI does it, but you might be able to generate some sort of revenue stream, which I think makes far more sense than the UBI stuff. But anyways, suffice to say, suffice to say, the markets are the markets are being generated, and they're in a lot of different places. And I think we're going to get, instead of simplifying everything, things are going to get a lot more granular, and a lot more opportunities will arise for people who then can exercise their knowledge and find an edge in it in a way that's different than finding an edge of who's a new CEO of a company or what new product is going to come out for a pharmaceutical. So we'll see. All right. Our first story of this week. So crypto market rallies and Bitcoin passes 100,000, and Coinbase did a $2.9 billion move where they bought Deribit. Deribit was the platform I was using before for trading options on crypto. Forgive me.
You are forgiven. New Pope says you're forgiven.
I'm finding this amazing. Well, one, I'm not amazed that Bitcoin hit 100,000. Why? Because we've been calling it for weeks, for months actually. Even as the Bitcoin price has fallen down, like it's going to fall down near the $74,000 level, and we're going to rise back up pretty quickly to all-time highs. And what is it? 27 days so far since the lows of 74, where people are jumping out the window, going the crypto cycle has been truncated like clockwork, and then rise right back up with like no end in sight. Well, no end in sight until July. Just for the record, for right now, July seems to be where the crypto market will peak. At which point, I'm going to be calling for, as soon as the liquidity pulls back, I'm calling for the full-on drop and expecting it. We're going down to 40,000, which will be fine. I don't care. Just invert my charts and trade the other way. So Bitcoin 100,000. So we're getting, so we're getting a bunch of altcoin movements now. Now I'm gonna have to eat crow a little bit here, because Ethereum surged like 39%.
Really?
Yeah, some major move. It pulled back a little bit, so I think it's at 20% right now, but it surged up pretty high, and which showed there was life. This life inside of the alt markets. Solana's up, Cardano's up, all these Pepe's up. Like all these coins really made a significant move. Let me just pull up Ethereum. Yeah, Ethereum went from the lows of 2,300 up to no, sorry, that's not it. The lows of 1,400, all the way up to a high of 2,500. So I mean, that was one hell of a move up.
I'm not
What
showing
am I
your
talking
screen,
about?
by
That
the
was a
way.
70. Yeah, no, I was looking. That was a 79% move. Let me show
Wow.
that here.
E-crow,
That's
huh?
79% that it from the lows. That is, I mean, say what you will, that's significant. That's significant. But we're seeing this sort of lift throughout the markets, not just the crypto markets. I was looking at HIMS the other day. Look at that move on HIMS.
We're not seeing this, but just should I show
sorry.
your screen?
Yeah, share my screen.
All right. Give me a second.
Look at that move on HIMS.
Ooh, that's
Went
Mike
all
brought
the way
that
up.
to your attention, right?
No, HIMS is one of those things. There's a HIMS House podcast. I've been messaging them, trying to get one of them on the show, but hey. And the trend, if we take a look at the actual trend here, we'll notice that the super predictable. So the price came back down to the yearly average. To the yearly. Oh, never mind. 1 second. Came down to the yearly average, bounced, and went right back up. I mean, that was a 130% move, 139% move from the lows, 130% move from the lows. That's amazing, and we're getting that through all kinds of different assets. Microsoft gapped up. All kinds of assets are moving pretty legitimately, and so the thing that's the thing I want to keep in people's minds, and I want people to be watching after hours to get a sense of how the markets work, so that you're not, buffeted around by what Jim Cramer says or whatever talking head says. Liquidity is what the markets are moving on. Like that's what the markets move on. So if we just put on the liquidity indicator over here, you'll remember here that this is where we call the low, and then we have a rise up over here. And it doesn't really matter what the narrative is. The liquidity is liquidity, and it takes 12 weeks in order for it to just flood through the markets. And this is what we're seeing here. That's exactly what we're seeing. So it's no surprise that we got a big jump off of all these things. And if you know that, if you're watching this, you know that a regular person, even if you're not trading every day, you can decide, okay, now's a good time to buy stocks. Now's a good time to buy a bet. Now's a good time to play options. Now's the time to open up my Robinhood app and buy the thing, the Tesla stock that I was interested in. This is what I find to be absolutely so fascinating. Just keep in mind, though, that this is not going to last forever. I know Solana's up 10%, Pepe's up 10%, Ethereum's up 20% in a single day. And there's all kinds of interesting news that are happening, but we're going to get a peak. And when that peak happens in liquidity, you want to be one of those first people to be calling it down, down. So, did you? How was your crypto portfolio? You were happy to see it over the last month?
Look, I'm not like you guys. I know you're trying to make me into one of you guys, but I'm not. I set it and forget it, and I'm just happy to be holding the crypto. I'm not making. Look, obviously, people making more money playing the game. I just don't have. I don't have the brain for it. But I am definitely happy. I'm definitely happy with what's going on in the markets. But look, this is what I want. I basically want there to be life. I don't want there to be like this. Crypto's done. Honestly, I'm just telling you from my perspective. Under Joe Biden, I don't know if it was Operation Choke Point or whatever they're doing. It seemed like the administration was against crypto to some degree, and now it seems like they're not. And I'm more excited about that than I am about the rest of it. And I don't know if this is true, but I heard that the upswing in the market coincided. I know you're talking about liquidity, but that Trump signed a deal with the UK, and that it was the first trade deal that was signed to show that there was life to this tariff thing, and that's when the market rebounded.
All right, so bets like that, like those types of events, I go on Polymarket, go on Kalshi, take those bets for those types of event risks. When it comes to how the markets move, it's like the market is always looking for a reason to go up and to the right. It always is. And so for a long time, I used to spend years just like knowing the news and know what the catalysts were and all those sort of things. And now I don't. How much do you hear me talk about like this is the narrative and this is the news and this is what this person says? I don't really spend time looking at that at all. I look at positioning and I look at how the market is moving. So that hinge chart that we showed, when the price gets down to that level, I go, well, something has to happen here. And then when I go, and it could be, you know, HIMS goes bankrupt or the CEO changes or whatever, in which case I would expect it to break and go down pretty dramatically. But then when I see multiple different assets all going towards their yearly average, then I go, oh, okay, some major thing is going to happen. Some major event is going to happen. First, to me, it's like, this is why the astrology for men quote for stock market, for technical analysis, to me rings very true, because you can set your watch on it. The prices all converge to a certain thing and you go, something's going to happen. Something is going to happen. And then boom, a trade deal. Boom, we move to the price moves and people go, oh, we didn't see that coming. You didn't need to know what was going to happen. Or you didn't need to know why it was going to happen. You just know that the chart has to move in this particular way. I'm not going to put it up here, but the dollar fell below 100, a level that Mike and I have been talking about for weeks, and then it bounced up, right? It bounced up to, I should show it. One second, let me share my screen. All right, so you have the dollar over here.
You can remove that high thing at the bottom.
All right, we take a look at the dollar. You'll see that it fell below the 100 level, which was a significant level we've been talking about now for a while. And I said, I think a week or 2 weeks ago, we're going to climb back up to over here. And we're hitting right at that level over here. So now that we're here, it has to either break out pretty significantly, because it takes that force to break out, or very likely it's going to roll over and fall. And the next fall over here, the rollover and fall, is where I'm expecting the big push, the rally in Bitcoin to get to $150,000, $200,000. And for stock market to get to all-time highs. Not unbelievable all-time highs, just barely all-time highs. And then when that happens, well, the dollar will be at some lower level, like it'll fall to some lower level around here somewhere, and then it will either go sideways and then bounce back up. It'll be over. So this oscillation will continue, and there'll be another oscillation, right? Like it's going to happen. This is not just going to keep falling forever and ever and ever. As much as Peter Schiff would want that to happen, that's not going to happen. What's going to happen is that there's going to be some other oscillation, and then we're going to be dealing with some other type of cycle, probably some sort of stagflationary cycle. And so that's what I find fascinating about the charts, that you can see where things are going to converge and go like, oh, something's going to happen. So when I only look for the event after the chart moves. After the chart moves, I go, hey, something should happen over here. Oh, the Fed's going to talk at 2 p.m. Something's happened over here. Donald Trump must have done something. Something happened here. Elon Musk must have tweeted something out. Then I go take a look.
So your charts first.
Charts only, because you get distracted with a narrative.
You've
Especially if anybody,
that.
yeah, if you're a novice in the space or anything like that, it is so easy, especially if you take one or two trades that go really well because of the narrative. You start thinking, I could see it, Final Destination style. And it's so easy to get confused. You got to like divorce yourself from the narrative completely and just trade the strategy that you're going to be trading. Just place the bet for the thing that you think could happen or not happen at the right location. That's all that's really needed. you were talking about the Rebecca Trades, that interview that Mike did,
Oh, so good.
and I think one of the reasons, it's not the first time I've heard of a stay-at-home mother being able to trade. I think there's something about, well, women in general seem to have, I know the stereotypical, but they have more experience managing emotions. And so when they're dealing with the chart emotions, I think in some way they don't feel it. I watch women traders, I watch women traders on Twitch, on YouTube, online, or whatever, and they seem to like nonchalantly deal with it. Whereas a guy will like their hair will be on fire as they're losing $50,000 in a minute. I've seen them of all ages too, but something about the stay-at-home mother who's like, "Hey, this is what I'm doing. This is my experience. This is where I can contribute to my family. Let me just do this diligently." Somehow they have a propensity to do this properly. So I'm really interested to see more about Rebecca Trades.
Now that you mention it, I haven't done a deep dive on it, but I don't think I've ever come across a female D-Gen, those D-Gen trader channels.
There's not a lot of them. There's a lot of them that are straight. Actually, I can think of several that are like, yeah, this is a woman who's on it, and she's very clear-headed and not trying to be sensationalistic at all, and just stating the facts.
Right.
Yeah, it's actually pretty common.
Someone should do a study.
We're going to be looking for a top in Bitcoin. That'll be in July. So enjoy yourself. I say do your own research, not financial advice. But if Bitcoin doesn't hit $150,000 by July, I'd be very surprised.
But you said there was going to be a pullback at 101.
Potential of a pullback.
Yeah, a potential pullback at 101. So you said by consensus 2025, we may not be celebrating as heavy, but then by the Bitcoin conference, that it should be up.
Yeah, I believe by the Bitcoin conference, it'll be up. Yeah.
Interesting.
But we'll see. You want a pullback to happen. Oh, this is just the final thing I should show over here because it's great to have this education, and I've been trying to popularize on here on after hours, looking at the liquidation map for Bitcoin. Okay, so you guys remember Bitcoin had a short levels in the billions of dollars. I mean, in the billions of dollars, that's where it was. And now we're down here, just spot checking here. We're at sub-billion. We're at 650 million versus 200 million for the Binance BTC USD liquidation map. And if it's even over here at for the OKX, Bybit, and Binance exchanges, we're down to let's call it 1.4 billion versus 6. So we're like, the shorts are being liquidated, right? And this rally will continue until every short is liquidated. Okay? We have to get at least to even, and that's when we're going to start with the levered longs. Because they'll be like, that's great. The shorts are going to be like, I'm done shorting. And I think you'll know that we're in the vein of the levered longs because we have here well, I don't want to make that prediction. What I do want to say, because I want to be more level-headed here on After Hours, is that don't think, I missed out on the bull run. Because that's what I would have thought too. I missed out on the bull run. Go, okay, I missed out on the bull run. Let me watch these people get levered long, and I'll wait, and I'll run it down the other side. Once it comes down, there's just as much money to be made, probably even more to the downside, because to the upside, you don't know where the price will stop. You don't know where it'll peak out at. But for the downside, we almost know pretty exactly where the price will fall. So I'm so looking forward to getting to the top, holding a short all the way down to the end of the cycle and just raking in the cash on that side. I really don't care where Bitcoin goes. All I care is that it moves. All right, Peter. Next up. Oh, I just want to mention on that for Coinbase bought Deribit. And what's interesting to me there is that I thought, wasn't Deribit not allowed for US holders? I thought that was the case. No, sorry, Canadian people couldn't use Deribit anymore. That's why I stopped using it. But it's a derivatives exchange, and Coinbase is buying it, which means it's really. I feel like the regulations now for crypto are really starting to loosen here, right? We had what is it? Arizona passed the Bitcoin reserve or the crypto reserve, strategic reserve for the state. We had
I didn't know that.
Robinhood, who is going to has started talks or development in the UK to have a blockchain over there that allows for trading of US assets. The crypto golden age seems to be happening. It seems to be open. And this to me is actually absolutely fascinating that we're seeing it. It's happening. Like all the things that the crypto people said would occur, it's opening up, it's flowering, and all these different opportunities are showing up. And so Coinbase buying Deribit, to me, that's like two big wigs, or like a big wig buying a smaller wig, but still large. And so who knows what that portends? What kind of things we'll have? Coinbase has that payment system. You can pay in crypto. So like Coinbase is starting to become like a PayPal. It's becoming a bank. It's becoming a trading platform. It's getting derivatives. It's pretty interesting. So, what's the coin stock doing right now? Barely moved. Last time to get Coinbase under 200. Last chance to get Coinbase under $200, because I'm calling it now. This is going to be a $5,000 stock. By 2150. By 2150.
2150. Hey, wait. Oh, you gotta let me know when you stop sharing your screen, buddy.
Sorry about that. All right. So next up, Fed's hawkish hold. Rates are steady and tariff risk looms. So the Fed paused at the last meeting. The Fed paused.
Was that expected?
And totally expected. Market priced it in. It was 92% chance before it happened. The Fed never does anything the market doesn't predict, unless some big exogenous shock is happening. So basically guaranteed. I got to stop placing bets on Polymarket against what the futures markets say for the Fed. It's not like the pulp markets. It's just so juicy to be like, ooh, these odds are pretty good. If something does happen, I'm going to make a pretty penny. But I keep thinking about if I just had all that money,
right?
Let me bet.
Yeah, you have the gambler's mentality. You got to get out of that. Forget the gambling.
That's not going to happen. What I do is I place my bets. I position my bets so that I'm not like it's not too painful, or not painful at all, actually. And then I forget about it. But what I do need is always a bet on. I always have to be in some bets, because I am furious if the thing that I would have bet on succeeds and I'm not there. No, thank you. I'd rather lose 10 times in a row and then break even than to just sit there with my money.
Because it's exciting?
No, because it's painful to not be part of it.
You want the optionality.
No. It hurts me to have knowledge for a thing and not haven't capitalized on it. It's like when I knew I should have bought gold at $800 an ounce, but I didn't buy gold, and I just watched it go up and up and up. Like or missed out on Bitcoin and all that. Like, no, place my bet, expose myself to the markets, and then I feel good. So I don't feel bad. So I don't feel good. I just don't feel bad.
One thing you talked about the female streamers that you've seen with trading. I don't think I've ever heard them talk about their feelings. Not like you.
Yeah, so that's what I'm saying. The guys are like,
you got problems.
Well, not just me. The guy streamers that I watch, they're like losing their minds.
Yeah, you got to get into your feminine. That's what you need to do to fix your trading.
No. What I do is that I feed the monster just enough in order for it to be tamed. When's the last time you heard me blow out an account?
That's true.
Like, you don't see that anymore. And that used to be me every 3 to 6 months. All right. So the Fed, Powell came out and they paused. All right. I'm not so interested in that. I'm interested in what the high priest of finance of the Holy Global Empire says about the government and expectations and all that, because it's funny. Fed speak only works when they plan it. So they plan the statement. Every word is scrutinized over. I mean, every word. People will be like, they remove and they replace it with. What does this mean? And they'll have 4 people on the panel talking about it. It's all about it. It's another form of divination, except that our God is our financial pope. But so in the question and answer period for the presser, sometimes Papa Powell gets a little flustered here. He has to repeat the same thing again and again. He knows he's repeating the same thing again, so he's trying to say it in a different way. They catch you off guard. These questioners, they ask 2 questions. Now they started doing this thing where they ask 3 questions in a row. Just one more question. And so he's only one man. Sure, he's the voice of God, but he's one man. And things will slip out that you're like, hey, what's going on here? Especially when, like, 6 months ago, he said something completely different. You're like, wait a second. So I just wanted to play a couple of clips from the last presser. Just if you haven't watched it, these are the things you want to pay attention to keep in mind.
In Congress, and I just wonder if I could press you on the last part of your statement. Are you any closer now to deciding which side of the mandate is going to need urgent care first?
Side of the mandate, that's unemployment and stable prices. Right? So that's the mandate for the Fed.
Well, so as we noted in our post-meeting statement, we've judged that the risks to higher employment and higher inflation have both risen. And this, by the way, of course, is compared to March. So that's what we can say. I don't think we can say, which...
High unemployment, high inflation, stagflation. The worst of the type of events you can have economically. Deflation is better than stagflation. Because deflation, some people are making money. Some things are getting cheaper. Liquidation sale, that sort of thing. Some labor markets become a little looser. There's more slack. There's more opportunities for employers to charge, pay less employees in order to get better talent. There's all kinds of benefits that can happen with a deflationary market, and it's going to end. Once all the risk has been deleveraged, you can start to build back up. Stagflation can last for 2 decades, and in fact, it can last for the end of a nation.
Which way this will shake out. I think there's a great deal of uncertainty about, for example, where tariff policies are going to settle out, and also when they do settle out, what will be the implications for the economy, for growth, and for employment. I think it's too early to know that. So, ultimately, we think our policy rate is in a good place to stay as we await further clarity on tariffs and ultimately their implications for the economy.
Hearing you describe what you're looking for in terms of being able to make a decision, it sounded like that's a long-term process before you sound like you're going to be comfortable, or the committee would be comfortable to act on what the data is telling you.
I don't think we know. I think...
So saying, okay, if what you're saying is true, if we have to wait for the tariffs thing to settle out, and you have no idea, then you're not going to make any decisions forever. Like, you have no idea what's going to happen. So he's like, so you're not going to raise rates or cut. So it's just going to be paused forever. That's what he's sort of implying. And Powell goes, well...
If you look at where we are today. We have an economy that, if you look through...
Okay, forget it. He's going to do his Fed speak. Let's just jump to where he says he can't cut.
So that's that. In terms of preemption...
preemption is the idea. Can you cut now, expecting hurt in the economy? So preemptively cut, which has been all the rage, because when they didn't raise rates when inflation started, people were like, why didn't you preemptively raise rates? You knew that inflation was coming. Why didn't you raise rates? We're the highest inflation in 50 years. You're the Fed. You didn't raise rates? You didn't see it coming? Half the analysts saw it coming. Anyways, inflation is transitory. You'll remember that term.
I think you can look back at the 2019 cuts as preemptive. I wouldn't say that what we did last fall was at all preemptive.
The 2019 cuts were the Powell pivot. Oh, I just love that I know all this. No, sorry, 2019 wasn't Powell pivot. That was 2018. 2019 was the Volmageddon that led to cuts and then COVID.
If anything, it was a little late, but 2019 we did cut 3 times. But the situation was you had a weakening economy and you had inflation at 1.6%. So that's a situation where you can move preemptively. Now we have inflation running above target. It has been above target for 4 years. It's not so far above target now, and we have an expectation, conditional on what happens, that we'll see upward pressure on inflation. If you look at where forecasters are, they're all forecasting an increase in inflation. So it makes it, and then we've all.
First time I think I've heard him say, we're going to get higher inflation. Right? The Fed does not normally say that. He's like, he didn't say we're going to have higher inflation. Just all the analysts say we're going to have higher inflation. That means start selling those bonds, babies, because 4.3 is the bottom. We are going up.
What?
You have to. There's no way around it.
But that's disastrous.
It's disastrous. It's going to be stagflationary.
So what's the trade? You get out of bonds and what?
No, you sell bonds, short bonds or sell bonds, and you go into inflation assets. Gold, looks like Bitcoin. Well, we don't know. I don't think Bitcoin's an inflation asset, but we'll see. Gold, staples. Well, it's hard because the AI play is making some of these companies where the necessity of the job, the layoffs, then come with a desire to funnel some of that money into AI workflows that then increase their productivity and widen their margin. It's like this weird situation where, let's say you would have fired 10% of your staff, maybe you fire 15% of them, take 2.5% of that money, funnel that into AI workflow development in order to make the remaining 85 people on your percent of the people on your staff twice as productive. Which means, one, you're gonna get more output from the company, and those people who are fired are never getting that job back. So is that stagflation? Because it's like growth through job loss.
People need money to be able to buy those products and services.
The people who are still employed can still make more money while the company still has less employees. So those who are employed would have more money to spend on those things.
You're describing a dystopian future.
No, because I think what happens is that as that happens, more people have the opportunity to create new businesses. And because of the slack in the economy, the amount of unemployment, your ability to solicit workers will be high at a lower pay, and you could try different things, right? If you try to start a company in an industry where there's no slack within it, and the only way you can really get good talent is to poach them from other companies, you have to give them 20% extra pay or whatever. But let's say now there's 10 candidates who would be worthwhile, well, you can pay them 20% less and get the same amount of talent. And the necessity of those people were like, I got to find something to do. So if you have the productivity in the hands of people like you and I, who can actually use these systems, we're seeing what would have been 40 people companies now running with 2 people, like literally. And so more and more opportunities get created. As long as the productivity is there is what matters. So that's where I'm not sure where to put it. This is stagflation with potentially a buildup of massive productivity. And once that blows out, golden age. It's like the golden age thesis. Anyways, so back to what he was saying over here.
We've also got forecasts of weakening in the economy, and some have recession forecasts. We don't publish a forecast about that. We don't publish a forecast that assesses how likely a recession is.
Yeah,
But
of course.
in any case,
Why would the Fed publish a report about how likely a recession is? You only have 2,000 PhDs.
It's not a situation where we can be preemptive because we actually don't know what the right response to the data will be until we see more data.
We can't cut. We can't raise. We don't know.
Fire this guy.
Get him out of
Trump,
there.
Trump is right. Get him out of there. He's too slow.
The last thing I'll just jump to this. Well, he goes on to say, well, let me play it.
We knew doing this in real time that we weren't going to get it perfect, and those kind of after action kind of looks are essential, and we're doing the same thing in our review. So on some issues.
The other part of that critique is that you've taken on topics that are outside of the mandate, such as
Okay, let me just jump to this one.
Victoria. Hi, Victoria Guido with Politico. I wanted to ask, Congress is currently debating spending cuts alongside extending the tax cuts. And I know you've talked many times about how the path of the debt is unsustainable, but given that we're also talking right now about the economy slowing, potentially even recession, I was just wondering, is there a danger that spending cuts now could slow growth a lot more?
We know.
Okay, no, I'm in the wrong spot. Let me just get it to where I need to be.
We knew doing this in
mandate, such as climate change and trying to ensure that certain groups are benefited by your.
So for a while there, for like a year and a half, the Fed was talking about climate change. They're adding climate change as one of their things they have to, and equality and stuff like that as part of their mandate. And I was like, what's happening here? And they're like, no, that's like an offshoot of stable
Right.
prices, employment.
Yeah.
And should have a hand. Well, watch them walk this right back.
Economic policies in terms of employment, et cetera.
So, okay, on climate, you've heard me say over and over again that we will not be climate policymakers, and that our role on climate is a very, very narrow one. And I think that's what we've done. We've done really very little on climate. You can say that little bit that we've done was too much, but I wouldn't want to give any impression that we've taken climate and it's something that we're spending a lot of time and energy on. We're not. We have very, very narrow things. We did one thing, one guidance for the banks, and then we did a one-time stress analysis, climate stress analysis, and that's it. And we dropped out of the network of green, the financial system. So we didn't do much on climate, but I do think, and I've said this publicly several times, I think it's a real danger for us to try to take on a mandate like that, which is very narrow application to our work. And the risk is if you go for things that are really not on your mandate, then why are you independent? And
All right. So just to mention there, the reason I bring that up is not because I care about climate change. It's just to make the mention over here that he says we did very little. We just did guidance and stress tests. Peter, other than like quantitative tightening or whatever, what does the Fed do other than guidance and tests? He thinks those things are very little, right? And they weren't stressing this when they were talking about climate change back. Right? I'm not going to bother pulling the clips, but they'll change that story whenever they need to change the story. So the point I want to make over here is that what the Fed does is talk. We don't get forecasts to see if recessions are coming. Third-party analysts say this. This is what the narrative is in the market. Excuse me. Why aren't you telling me if it's going to rain next week? That's what you're supposed to be doing, aren't you? But they're all about jawbone and all about guidance. So the reason I mentioned all this is for traders, do not be fooled by whatever the Fed says. They'll do whatever the markets say they should do, right? If it's going to price in cuts or hikes or whatever, that's what we're going to do. Because the last thing the Fed wants to do is the opposite of what the market says. And you got to basically treat them like Jim Cramer. Just like, I don't care what you're saying. It has nothing to do with what's actually gonna happen.
All right, but don't you watch, like you watch Jerome Powell speak? You're like, oh, I got to go and listen to what he's saying.
Well, I watch him speak in the way that I would watch the Pope speak, not to hear the voice of God, but to hear what someone who thinks they're the voice of God has to say.
Oh my God.
It's fun. It's interesting. And then you hear how everyone else interprets their things and whatever. And then you can now I place bets on Polymarket based on what Powell's going to say. So I make some money or lose some money in that vein. So that's fun.
I got you.
But it's nice to know what the narrative is, right? What the narrative is. He's coming out and going, like, tariffs bad. Tariffs bad. Tariffs uncertainty. If anything bad happens because of tariffs, it's not our fault. And we're not going to do anything. We're not going to do anything. We're not even going to forecast if a recession is going to come. We're not doing nothing until we see the effects of the tariffs, which is exactly the thing you're supposed to be mitigating. Anyways, before we continue with the market minutes, please, let's just get a word from our sponsors.
Ask yourself this. Are you making trading harder than it needs to be? If you're trading manually or still coding just to connect to your broker, yeah, it's time to upgrade. Traders Post lets you automate trades using signals from tools like TradingView or TrendSpider or even your own custom setup. It works with brokers like TradeStation, Tradeovate, Coinbase, and a bunch more. I've been using it myself, and getting started was smooth. The platform's clean, setup's quick, and once it's running, it just works. And when you're ready to scale, more strategies, prop firms, or sharing signals with your community, Traders Post handles it. It's built to grow with you. Start your free trial at traderspost.io. Trade smarter, automate your edge.
All right. You want to team me up?
So there's a lot of small news that happened over the last week, but as always, there's no point in us belaboring the point, but you need to know some of these things that are going on. So let's take it away with the market minutes for some of the other stories that happened over the last 7 days.
Semiconductor stocks surged late in the week after reports of loosened AI chip regulations lifting the broader tech sector. This matters because regulatory clarity can unlock new growth for chip makers and drive tech index outperformance. S&P 500 seesaws on tariff talks. Wall Street's main indexes fluctuated as investors parsed President Trump's comments on U.S.-China tariffs ahead of weekend trade talks. The uncertainty kept traders on edge, highlighting how policy headlines can drive intraday volatility. Disney shares jump. Stocks rose over 6% for Disney in pre-market trading after fiscal Q2 earnings beat Wall Street expectations. Strong results from a consumer bellwether can boost sentiment for the entire discretionary sector. What does that mean? If Disney does well, then that means everything else might go well?
Bellwether, it means that this could portend good news. It could be the thing that starts off the good news cycle, because as good things happen, you have this expectations for more good things to occur, and then the consumer and the employer might take decisions accordingly.
So how does that jive with the bond market? 4.3% is the floor.
Well, the people who care about the bond market, wonks like me, it's hard for that to bleed through to regular people or to regular retail traders, because they don't see the bond markets affect sovereign nations and the flow of collateralized capital through hedge funds and things like this. It doesn't affect the guy who's buying Disney stock or Tesla stock. So the sentiment that consumers have, if you read the bond market, that's like the tea leaves that tell you that's what's going to happen like 2 years, 5 years, 10 years out. But the narrative along the way, people get chopped up and distracted and whatever that's going on.
Gotcha. Continuing on, gold hits.
If I were to ask you, should long-term yields be higher or lower than short-term yields, what would you say?
Long-term yield should be higher.
How much higher?
I don't know.
Exactly. Right. So it's 4 point. If the bond yield is at 4.3% and the 2-year is at 0, is that the same thing as if it was 4.3 on the 10-year and 3 on the 2-year?
I have to ask Jerome Powell. He's I only listen to him.
Yeah. So, but if I were to ask you if Disney shares went up 6%, is that good?
Yeah, it's great.
And if it goes down 6%, is that bad?
Probably bad.
Exactly. So that's why people don't pay attention to the bond market.
Gold prices climbed more than 2% in a 2-week high, supported by China's post-holiday buying and renewed U.S. tariff concerns. The move signals traders are hedging against macro risk and inflation. Utility sector outperforms. Consumer-facing electricity and natural gas providers led the S&P 500 up 6.9% year-to-date and poised for a breakout. Defensive sector leadership suggests investors are positioning for volatility or economic slowdown. Arizona passes Bitcoin reserve bill. Arizona became the second U.S. state to pass a Bitcoin reserve bill, reinforcing pro-crypto policy momentum. This development highlights the growing trend of state-level crypto adoption and regulatory support. Charts change, but hype never sleeps. Those are your market minutes.
That's great. All right. So before we end today, we're a little over time. So let's just end with the this tweet. Again, it's going to be from Carson, Kim Carson, who is the market guru. He's fantastic at being able to predict some of these market movements. He was saying some weeks ago, I think back in April 15th, that the current rally in the S&P should go up to like around 5,600 to 6,000 before a major decline begins. Which, and you have to like multiply that like that percentage difference by like 5x or 10x for Bitcoin. Then he's expecting a drawdown within the markets all the way up to like 45% between now and the basically February 2026 or the end of this year.
Wow.
So yeah, exactly. So most crashes start in March or in September. Well, February, March, or September, October. And so I would be looking to be getting out of Dodge July, August this year, expecting for that might be a dip in August and then a bounce, a rally back up, and then full on crash afterwards. Keep some dry powder. You want some cash on the sides to be buying some of these lows, stagflationary lows, because if it is stagflation, we're going to get up, down, up, down, up, down, up. Why? Because if we get a crash down, what's the Fed going to do, Peter?
Cut rates.
And if they cut rates, we're going to have liquidity that increases, and then the markets will go up, and that will re-engineer more spending, and that'll cause more like the inflation that's not coming down is going to bounce back up, and then they'll have to pause, or there'll be another crash as there's issues with growth and all that sort of thing, and you'll just go up and down and up and down and up and down and up and down for 10 years. So you got to be buying at the lows, selling at the highs, buying at the lows, selling at the highs, buying at the lows, selling at the highs. Because if you just buy and hold, nobody. So we'll see.
Tom, look, Mr. Know-It-All, I know what the market's going to do. I know what's happening, okay? You know nothing, Jon Snow.
I don't know. Look, if I get too big for my britches, you know what? I'll buy YouTube, and then I'll just talk about the markets all day long. Either YouTube or Twitch. I haven't decided yet which one I want to buy, but we'll see. All right. That's it for After Hours for this week. Thank you, everyone, for watching. Understanding markets is very important because as traders, we don't just watch the news, we trade it. We're going to be back here on Tuesday for office hours for behind the scenes stuff for Traders Post, especially touching on the idea of building out strategies on automated strategies. We'll be here on Thursday for Blueprint, where we walk through and do tutorials about setting up automated trading environments, and of course next Friday for even more market data. That's it, and we wish you guys a happy trading.